Hello everybody and welcome to today's live stream. We'll get started here in just a minute. I will be switching over here to my screen share and we'll go to the market. We will be going live here in about 5 minutes. Bringing up the comments on my phone here. Good morning all. Okay, so you guys should be able to see the comments and can type anything in you like. And while I'm waiting for folks to arrive, just paying attention right here to see what we're going to do here at Market Open. I can go ahead and remove this. Because we will, here in a little bit less than 4 minutes, we will be putting in a new opening price level for the regular trading hour session. Good morning, Sonny. I see your comments there. Glad to have you. We're just waiting for a few more people to join and for the market to open. Not really sure exactly what we're going to do when the market opens up. As you can see, the overnight action started right here, and we opened, we flushed down, we went right up here, came back down, and this one didn't actually touch supply, but this one did, and then we immediately sold off. See that, the first touch of supply right there? And then we immediately sold off right down here into demand, which then sent us right back up to the newly created supply, and then back down again, and then we've caught some support here around the 2351 area, and oddly enough, we got some negative numbers this morning, and the market went up instead of down, which is pretty common for what they've been doing to us lately. See, we're getting a few more people joining us. Welcome, everybody. Market will be opening up in just a little bit less than 2 minutes. And then we'll get started and see what we're going to do. That's what we were just talking about. You know, here's the overnight action, up to supply, down to demand, back up to the newly created supply, and then back down. And we've caught some support right here around 2351. Now waiting to see what they're going to do on market open. Obviously, we already know the bigger picture is still trending down. I put some comments in the room yesterday about the fact that, like yesterday's action, okay, here's yesterday right here. So what did they do right out of the gate? They ramped it, gets everybody excited, but they ramp it right up into supply, it sells off, okay? Then how did they close the day? By ramping it up again. But on the day, we were down almost 100 points. But to the retail trader, it looks like, hey, we had a great day, right? We started off good and we finished good, but we were actually, if I remember right, we finished the day down like 98 points. All right, which continues. You see our trend line, we just keep going down. Here was the previous day's action. So they try to keep everybody off balance. They try to keep you thinking that things are better than what they are. I mean, we know in this room, in this community, that things are not good. And we're talking about from an economic standpoint, and we have this market correction going on. But that doesn't mean that we can't make money, that we can't trade it properly and use what we know to be true and what we know works to continue to profit. So here we go, a couple of seconds, and we're going to get started. Okay, here's market open. We opened at 2387.75, so I'll get that drawn in. 2387.75. I always like to get that put in right away, and you guys can see it. Whether you use this on your charts or not, whenever we are together, we'll always have it so we know what's going on. Okay, so nothing too exciting yet. We'll see if they're going to try to fake everybody out, or are they just going to try to flush it here? Right. Normally, the first move of the day, is counter to what they're really going to do, but not always. They got to mix it up once in a while, right? You know, so like if we look back over here, right here, first move of the day, up, right into supply, and then here was the real move of the day. They just flushed it down. So we'll see what they're going to do here. Right now, first minute and a half, just slightly red. Hey Al, I see you there. Nice to have you with us this morning. Okay, testing the 20 right now, right here. 20 simple moving average, 200 simple moving average. So far, all of our movement has been to the downside. We're only a little over 2 minutes in. As you guys know, I never recommend trading right at market open anyway. Come over here and look at our advancers. We opened up in the high 700s or right around 800 right now. Good mix this morning of names that are up, names that are down, and names that are flat. So we have a good mix today. That hasn't been the case during this market correction. We've either had 90-95% of the names gapping up or 90-95% of the names gapping down. Today, a little bit different story. We're going to start going through some names here in a minute. We're just looking to see what they're going to do this first 5 minutes or so. Right now, they're selling it off. We'll see if that continues. I see we got a couple more. We're up to 6 folks, so welcome everybody. Again, we're just watching the market open here just for the first few minutes. We're going to see what they do. And again, you can see that ES has been really smooth with supply and demand. Up into supply, sells off. Okay, we get a bounce, which creates demand right here, right? You have a drop, base, rally. Okay, and then we came up. Now this one, if you look really close, it didn't actually touch. And then you come over here. Here was the first touch. And then it sold off big time, right? And that's what we look for, right? That's what we look for. Down into the newly created demand. We catch a bounce out of there. Back up to the newly created supply. Right here. And I'm going to teach you guys something. And obviously, every day we try to refine your skills a little bit. So a question that comes up, as you can see, they're still selling it off. We're down to the 2351 support level, catching a little bounce. So we're just going to watch that. But I want to show you guys something about supply and demand. Somebody may ask, how did I know this was the supply level and not this, right? So we have a rally, base, drop. Okay, so why was this level right here not the supply level? How did I know it was this one? Okay, so I'm going to teach you something. Over here is where this supply was created, right here. Okay, we come over here and first touch, doesn't really matter that's first, if this one really would have touched it or not, doesn't really matter. Once a level, okay, so this level here takes out a fresh level, this is not supply, okay? That's a nuance of supply and demand. So once this level here took out a fresh level, you do not use this for supply. You look for the next lower level just below there, and we got one, right? So we had a drop, base, drop. That's what created this, and as you can see, it's exactly what was respected. Okay, so some people, I was working with somebody the other day, and they were really struggling with, they always wanted to draw their supply at the very top of a rally-based drop, or at the very bottom, which we did have it here, of a drop-based rally. Okay, now those are typically the areas where you get your strongest supply and demand. However, like I said, if this takes out fresh supply, this takes out fresh demand, all right, then this right here, this base does not create supply. You would then start looking for the next level down for your supply zone, or next level up for your demand zone. So those are things that we'll keep pointing out and we'll teach as we go along each time we do these sessions. Yep, really big move. Yep, really big move. And Al, I think you're talking about this one, right? Okay, so obviously that shows us that this area here was going to be a lot of strong sellers when we came back to it. Okay, so obviously this is a strong move anyway. But let's just say that this move away was stronger. I mean, that's a decent sized candle there for a move away from here. But let's just say it was these size candles. This still would not be your supply area. It would be your next basing level down, as long as you had a decent move down, base, and then strong move away. And again, all you got to do is look at it and see, this was the level that was respected, right? Right here. You know, why didn't it come all the way back up here? Because this was where fresh supply was. I cut it off, you know, this was extended over here until we touch it, and then I always bring it back. Okay, when you come back up, can it bounce there again? Sure, it can. But the odds go down every time a level is tested. Okay, so here was our first test, we get the bigger move. Here's our first test, we get the bigger move. Now if it would come back up here and bounce again, okay, then we're likely to maybe even go lower, but then the next time we would come back up, the odds are even more in your favor that it's going to go on through. Yep, drop, base, drop. Exactly. So Al, what you're pointing out is if a rally-based drop, if this is taking out a level and this is not your supply level, you're exactly right. Then you're dropping down until you find your first strong drop, base, drop. And that's where you would draw it in. Okay, so yes. So come back over here. You see we're still moving down. We're trying to push through the 2351 area right now. Okay, so right now they're trying to flush it. Okay, we know that if it gets below here, then it's likely to continue to drop. All right, now this was fresh demand last night. We came down into it and we got our bounce. Okay, again, could it stop in this area again? It can, right? It can. And we'll just look to the left and know that this area is here. All right, now it spent a little bit more time in there. You see this? So here was where it first touched, and it actually spent 30, 1 hour, 30, 2 hours, 30, 2.5 hours in here. All right, so that chews up a lot of the demand. All right, that chews up. That makes it more likely that if we get back down in here that we're either going to go deeper or maybe even all the way through. Okay. I'm still watching this because we're still going down. We'll look at a bunch of different names. Don't worry about that. But I'm just taking the time to show you about the little nuance up here. And as long as we keep flushing, we're going to watch this for a minute. All right. So right here, right? It's trying to get below there right now. You see this? Right below here. If it gets below there and holds, then your next wick isn't until down here. All right, and then we would be getting into this area, which should be weak, but it could catch some support there. Maybe even temporary support, right? You might get down in here, bounce, and then head lower. So we're going to take a look and see what happens. All right, if I come back up here, I'll show you again. Right there, that's where we needed to get below first. We're below there for now. Then the next area is this wick right here. Okay, so once we get down into anywhere in this wick, right, you could potentially see some support. That's not a huge wick, but again, we're looking for potential areas. This would be another one, right? This wick right here. But right now, they're trying to flush it right out of the gate. We are 11 and a half minutes in, and it's all been down. They didn't even try to spike it up. It's just all been down. Which this morning I did see a lot of mixed sentiment. I saw some people that thought, we're going up because they look at this here and they think this is a double bottom, right? They think this right here is a double bottom. So if we had a line drawn right across there, you would see that this got into it. We know it's a demand zone. Okay, but a lot of people look at that and say, well, that's a double bottom. We're going up today. They think we're going up. Other people, they look at the same thing we've been looking at, okay, trending down, right? Even when we get these spikes up, we're still trending down. And each day, it just seems like we get a little lower and a little lower. And then, like I said yesterday, they kind of trick you. Good open for the first hour, then they flush it down, then they end it strong. But then when you looked, and I circled it and I put a picture in our room yesterday, we ended up down like $100, almost not like $98 for the day. But they make you feel good, right? Because this is how they ended the day. Then overnight it sells off and then it rallies back. But we know, again, it makes sense. It makes sense. Sold off into demand, rally into supply, sell out of supply. And it's still going lower. All right, so now we're almost to the start of this wick. Almost to the start of this wick right here. Okay. And again, I don't like to play open, the regular trading hours market open, especially because of this. Oh. I'm so sorry, guys. I did not have my microphone close to my mouth, so I hope this sounds a lot better. Sorry, guys. Thanks, Grayson. I'm a little discombobulated this morning as well. Like, our internet has been crazy today. Like, my computer has been the only thing solidly connected to our internet, and all of our phones. We have Roku and Netflix and Amazon Prime and all that. Well, that's all off of your internet. None of that has been working this morning. Our phones have not been working with the internet. Anything else in the house except my computer has not been working with our internet. And it's so weird that that my computer is working when nothing else is. Maybe that has something to do with like now I am plugged directly into the Ethernet right now, but it was working on Wi-Fi anyway, but nothing else was. So, okay. So we're still catching just a little bounce right there. Nothing major yet. We'll see. And like I always tell you guys, anything can happen at any time. We just know what the probabilities are, right? So right about there is where that wick starts, and you can see we got almost to it, taking just a little bit of a bounce. But I mean, things can turn anywhere. You guys who've read Trading in the Zone by Mark Douglas, you know the story that he tells in the book, right? About the trader who is an expert at technical analysis, and then he tells his boss that he knows exactly where the market's going to turn and when it's going to turn and all that. And then his boss embarrasses him by showing him that if anybody has enough money, one person can make the market turn whenever they want to. And that is true. If you have enough money, you can influence the price action of the market. So technical analysis works the majority of the time, but you always have to keep in mind that sentiment can change for whatever reason. It could be somebody out there that's a whale that has millions and millions and millions of dollars, and they want the market to stop at a certain point or reverse at a certain point. Typically, it's going to be institutions, banks or hedge funds or prop desks, things like that. But the market can turn anywhere. I've seen your comment, Al. Yeah, we were thinking about that too. Obviously our kids are home from school, and everybody's on the internet, but we still should have enough. I had my internet checked recently because we have 1 gig, which is like 1,000 Mbps per second, and our speeds when we checked them were really slow. So they came out and checked it, and they told me a couple of things I needed to do. So like right now, I'm plugged in directly to the Ethernet with this little adapter that Grayson told me about, and it like significantly increases the speeds. Or I can buy a more powerful router, Wi-Fi router, that even if everybody was connected, will still give you close to those 1 gig speeds, because I'm paying for 1 gig, but we were only getting like 130, 140 Mbps when I should have been getting like 900 to 1,000. So, I mean, the difference between 150 to say 250 or something like that is not that noticeable, but the difference between like 150 to 900 is definitely noticeable. Okay, what I'm going to do is I'm going to set an alert right here. And if we get below that wick, then we're going to come back. Just give me a second. I'll set it. And vice versa, if we get back up here, we'll know that price is reversing to the upside. Okay, so I have those marked. Now let's go ahead and look at some other things. Let's look at Apple. We'll run through a few of the popular names first. If there's anything you want me to look at, just let me know. Okay, so there is Apple. That was yesterday, so let me remove that. Apple opened up. Okay, here we go. We talk about it all the time. They opened it up right at resistance. Okay, so this would have been your open right there. And what did they do? Sold it right off. Okay, right down to support, and then bounced right back up. Okay, so we talked about this a little bit yesterday. I told you I stumbled across that video of the guy who was trying to sell his own strategy, but claiming that support and resistance doesn't work. Well, I mean, we see it every day, right? I mean, right here. Opened up at resistance, immediately sells off where? Right to support, and then bounces back up. So that's coincidence, right? So that's Apple. Apple, as you can see, like many names other than this day right here, and that was the artificial ramp into close, has still been selling off. AMD. Okay, we can see we got that supply zone up above. So if we make it back up there, that's a place where it would likely catch a bounce. All right. AMD, same thing, trending down. Although we did have 1, 2, 3, 4. We had 4 days of sideways action, and then yesterday sold down right here to support. Again, look at this. Is that not amazing? Like literally right to support, caught a bounce. Okay, and today gapped up, sold down, and then it's coming back up. And if you drew a trend line right there, you can see right there is where it bounced. All right, that's AMD. Okay, Sunny, you've got a few there. So let's look at some of these ones that Sunny wants to look at. SSYS. I know this is one I don't trade, so we'll draw some lines in. All right, hang on. We're going to go back to the market, and then we'll come right back to this, Sunny. We had our alert go off. Okay, so now it's pushed back up to this level, 23.51. All right, so we got down, again, right there is where that wick would have started. We got almost to it, and we've caught a bounce. And now we're back up here to the 23.51 level, kind of getting back above there. All right, so now I'm going to set an alert up here at opening price, and then we're going to go back and look at these names that Sunny wants to look at. And we've already got our alert down here in case price starts to dive again. Okay, so SSYS. And again, this is not a name that I normally am looking at, so we're going to draw our lines in. Everybody will get to see that. We're going to go to the 4-hour. Do this before we do anything else, because then we know what we're working with. All right, go into current price, and we start marking our levels. 1301. We start working our way back up. I'm probably going to put one right there just because there was a little pause there. Then we're going to come up here. And then we're going to come up here. We'll put a few in, and then we'll go back and do a little bit of analysis. Okay, that's probably high enough. Now let's see if we can get down below $16 for anything lower. And doesn't look like it. Let's go to a daily. If you cannot find what you need on a 4-hour, then switch to a daily. And it just might be, oh, there we go. Okay, I was going to say, all right, so now we're below. So now we can put some more levels in, because we want some more downside levels to go with those upside levels. And we'll just put a couple more in, and that should probably be enough for now. I'm even going to come right down here. Okay, that's good. Let's go back to our 30-minute. Go back to candle. And now that we're on our 30-minute, we're also going to look here. Is there any reason? And I would say yes. We're going to put a level right in here, and you see why. You'll see when I put it in. Okay, respected here, respected on this candle, respected here, respected here, respected here. You see all that? Just in a short amount of time, respected about 4 times. All right, so that's why we added that level in. All right, now let's kind of get a feel for what we've been doing. All right, a lot of sideways action. All right, 1, 2, 3, 4, 5, 6, 7, 8 days of sideways action. Finally broke up, back down, kind of caught some support, moving its way back up. Let's look at the bigger picture. Okay, what are we doing on the monthly? Wow, look at that. Huge spike up. There's our 90 degree that we talk about all the time. Okay, huge spike up, which is going to lead to exhaustion, and then right back down. All right, so on the monthly, we're forming a hammer. Okay, we're forming a hammer after a strong move down. After a strong move down, we're forming a hammer. And obviously, we got some time to go in the month, but this is something to keep in mind. So we're green, forming a hammer. Weekly, let's see what we're doing on the weekly. Big green candle, big, right here off of support. All right, same thing, strong move down. Right here was a hammer. We never took the bottom out. Right there's the bottom, and we didn't quite get there, and then bam, okay, heading back up. So strong green on the weekly. We're going to look at the daily, and because it's early in the day, we're really looking at yesterday. So yesterday was a green, almost hammer, and we've gapped up. So we know, right, we're green, forming a hammer on the monthly, big, wide-ranging green candle on the weekly, and we're gapped up in green on the daily after a hammer-like candle. Okay, so there's your overall sentiment, right? We have a lot of confluence. A lot of confluence on this name, Stratasys. So where could we be looking at some potential supply, right? Right up in here, okay? Right up in here, and why? Because we have a rally, base, big drop. See that? Rally, base, big drop. Let's make sure. Okay, does this area get into anything else? It does not look like it, right? Okay, so this area is not taking any other area out. So you would come back to this first green candle, go to your rectangle. Let me get to my tools. Go to your rectangle. Okay, so when we're drawing supply, the first green candle, we're going to use the bottom. So that would be 2061. Wait. No, I'm sorry. 2018. 2018. So that's good enough to start off with. Then you're going to go to the highest point of the base, which is the top of that wick, because this is your base right here. So you're going to go to the top of that wick, and this is where you're going to draw in your supply. Let's change it to pink. All right, so now if price makes it all the way back up here, the first touch, you're likely to get a bounce down. Okay, now by then you'll know, did you create any demand on the way up? Right now you're not. Right now you're not creating any demand. And if you get a big, strong move and it doesn't create any demand and then you get a bounce, sometimes that can be a very good sign for a strong move back down, because then there's nothing to stop it either. Okay, but you won't know that yet, right? Because there could be several more candles in between here. You may come up here, come back down, then go back up, and maybe create some demand. We don't know that yet. All right. Now, let's see, and I may have to, let me do it like this. Auto zoom. I'm going to have to come way back. I'm going to see if there's any demand down below where we're at now. Let's come over here. We went up, we went down, we went up, down. Okay, potentially right in through here. So starting at around 1575 down to the bottom of this wick. I'm not going to draw it in right now, but just so you know, Sonny, so around 1575 down to the bottom of this wick. So if we came all the way back over, you see how far you have to go back to find it. Okay, we should be we go. All right. So we've already been through it. I'm so sorry. Okay, so it would have been right in here, and that's why you would have caught a little bit of a bounce and then back down, and now it's heading back up. So right now there's no demand anywhere close here. Okay, not right now. So right now it's working its way back up, and you know, there's a lot of potential that it's going to get all the way back up here to supply. Okay, NVIDIA. Say it correctly, right? NVIDIA. I'm going to look at these. Let's see where we're at. Okay, so here's NVIDIA. Opened here, flushed down, caught some support, bounced back up. Now it looks like we may get a break and a retest, right? Break. Looks like it's trying to retest. We'll know if it's a retest if this holds and then takes out the top of these candles. If it does, that could be a potential scalp to the upside. All right, now also I want you to look where it stopped. Look to the left. Not only is this a wick, what else do we have here? A gap, right? Gaps frequently act as resistance, especially the first time that they are tested. Okay, especially the first time they're tested. So what do? We look to the left. We not only have a wick, we also have a gap. So we've got a break. It's retesting. Now if it tries to go higher now, you're looking for it to take this out, and then you got to clear this wick right here. So that is 209.94. You'd have to get to 209.95 or higher and hold. And if you did, then you would hope to try to fill this gap and then get up here to 217.14, and then this wick would also be your next area of resistance to the top side. If it started moving down, okay, right here would probably be your first area of demand. And why is that? Strong move, okay, rally, base, rally. You see that right there? So if it started to move back down, I can draw it in for you. I'm not going to do it like look exact. I'm just going to eyeball it. And that's normally what I do anyway. Okay. So if it would start heading back down, this would most likely be your first area of demand. You always want to go to what's closest to price. Okay. Closest to price, especially if you're looking to scalp or day trade. Now, if you're a swing trader and you're looking for a longer time frame trade, then you're just going to try to find the absolute best, strongest, freshest areas, no matter how far away they are from current price. Because then your mindset is, I'm going to be in this trade for a long time and I'm going to let it go, you know, maybe even a couple of weeks or a few weeks. But if you're scalping or day trading, you want to find the closest areas to current price, because you're looking for those changes in direction. You're looking to catch those bounces. All right. And then for supply, it is probably going to be right up here. Right up in here. And again, I'll just kind of draw it in for you. Going to be about right there. We'll change that to pink. I will tell you what I don't like about this zone here in just a second. All right, what I don't like about it is we're on a 30-minute chart, right? So we did have a strong move up. Here's our rally. There's our base. Here's our drop. And this is a great drop. Whenever you drop, you leave a zone with a gap. That's like your best possible scenario. The second best scenario would be a large red candle dropping away, but a gap is your best, then a large wide-ranging candle or several medium-sized candles in a row. Okay, like over here. Like that's a strong drop. Even though none of them are huge like this, consistent drop away. Anyway, what I don't really like about this and why it might not be as strong as some other zones, we have this nice strong move up, but then 1, 2, 3, 4, 5, 6, 7, 8 candles. That's kind of pushing it a little bit. Okay, you're typically looking for, 2 to 3 to no more than 6 candles in a base. Because if you get too much in a base, it's chewing up the supply. It's eating it up as it's going across. So that would mean when it gets up here that this could be a little bit weaker. It's fresh, but it could be a little bit weaker than, say, a zone like this right here. All right, ES, we just had an alert go off. Sonny, I'll come back and look at your other name here in a second. Okay, so we're all the way back to opening price. Look at this hammer. Look at this hammer. Now, if we take out the tops of these candles right here, okay, then you have this wick, you have this resistance area, and then you would be back up to here. Right? These wicks, not this zone, these wicks, because this zone's been tested already. All right, so we're taking out the tops right now. Okay, so then over here's the next area. So then if we could clear that, okay, then you have this area, and then you'd get up to the tops of these wicks. All right, so somebody looking at scalping, if you enter there, you're going to have a tight stop. Okay, Sonny, on a rally-based rally, it can be 1 candle, 2 candles, 3 candles. It could be up to like around 5 or 6. Okay, it doesn't have to be. You don't really want them more than that. There's some people that will tell you they won't take 1 with 1. Okay, they think you need to have, a minimum of 2 or 3 to call it a base. I see it play out enough, like right here. Look, that's 1 candle. Now, obviously, this is a 30-minute chart, so that would be 2 15-minute candles, or it would be 6 5-minute candles, right? So you have to think about that too. You got to think about in those terms. Even though this is 1 candle, if you went down to a smaller time frame, it's more. Okay, but I see it play out all the time. Okay, here's your strong drop, base, drop. And that, even though it's only 1 candle, obviously that supply was respected big time. Big bounce right out of there, big drop. Okay. All right, so we poked our head up, right, and we're into that wick, and it pushed it back down. Okay, so that's what I said. This is your first obstacle right here. Got up, right there is the top, which put it right in the middle of this wick, and it's pushed it back down. Okay, for me, you guys know you're starting to learn how I think. I would look at this and say we've got a couple of resistance areas right here that I would be concerned about. That's why you would have, I'd probably, if I was in this, I'm not in this trade, if I tried to go long right there, I'd already be out. I would have had a super tight stop just because of what I'm looking at. Okay? Now, it may regain some strength and get back up through here, but you see it's going to make it tough, right? They're going to make it tough on you with this kind of condition. I would love to see this be a much smaller wick and not have a zone, a resistance level this close. I'd like to see it up higher, right? Okay, so it's making another attempt right now. Here we go. And again, you can always re-enter, right? You can get stopped out. You can re-enter. Nothing says you can't. These are futures, by the way. There's no PDT rule. Okay, still trying to push higher. It needs to get above that wick up here. It's got to get above there, and then it has to get above here, and then it's going to get up into these wicks. If it gets above these wicks, it could come all the way up to these wicks, right? Or this this resistance level over here. So you're always looking to the left to know, okay, what do I have to navigate? And Sonny, we're going to watch this for just a minute, and then we'll go back and look at UUPS for you. So just hang tight. All right, so it's up there testing the top of this wick right now. I'm going to leave my cursor there so you can see the line across. See the line across there? You see how it came right to it and sold off. Okay, so we need to get above that. Got to get above that. See, to me, this is not the type of price action I like, how it's just going up and down like that. That just makes it so hard for us retail guys. And even though we try to think and trade like an institution, which is what we have to do, there's no doubt that this kind of back and forth whipsaw action like that, it's just mentally taxing, right? So we're just waiting to see, is it going to be able to clear that wick or not? I tell you what, instead of just sitting here, I'm going to set an alert just above here. And then if it goes off, we know we've cleared this area. Okay, so we'll come back. So Sonny also wants us to look at UUPS. Now, is that right? It's bringing up an X with it. Is that correct? UUPS. It's only giving me this with an X. Is that correct, Sonny? I want to make sure I'm looking at the right thing if it even brings it up. Let's see here. I don't know if Thinkorswim is just lagging right now or if this symbol doesn't want to come up. It says we can't find that symbol. So Sonny, if you know something different, it says it can't find that symbol. We can always come back to it. All right, back to the market real quick. All right, so it cleared the top of the wick. It's right now, it's at resistance. Pushing ahead. It's going to probably, yep, just triggered our alert. Here we go. So now, right up here, these wicks. Okay, these wicks. Now, if I was scalping, I'm not in this. I told you, a little bit scary for me. I would be looking at exiting shortly before you got here. I would, right? So we cleared this obstacle, we cleared this obstacle, and now up here would be the next one. But if I was scalping, I would be looking at exiting shortly before I got to these wicks, just to lock it in. UUP, okay, I'll go back and look at it here in just a minute. UUP. Thanks, Sonny. Let's see what we do here. Almost up, getting into the wicks. Okay, now we're up into the wicks. You see that? That's why I have this cursor sitting here so you can see. Now we're into these wicks right here. So if we, now if I would have been scalping that, I'd be out already. Okay, and if it kept going, it kept going, but I would want to lock in, and that'd be a heck of a move already, right? If you cleared this at 23.90.50 and you made it just up to the top of this, 23.87.50, right? 23.90.50 to 24.17.25. Okay, that's a good move already. Okay, so now I'm setting it up there. We're going to see, can it clear these wicks? Okay, if it can, our next area is right here. And then our next area would be the 24.47.50 area. Okay, it is trying. Okay, it's trying to get above those wicks. You see when it gets above it, how it gets that little burst, right? Because when we have wicks in a diagonal fashion like this, you typically get a little bump here, which gets you over here. You're taking out stops is what's happening, and then you get over here, you get another little bump. All right. So if I get right there, you can see how far it bumped up above, and now it's pulled it back down a little bit. Okay, we're just kind of watching this price action play out. And then we'll go look at UUP for Sunny. But again, I personally, I would have already been out if I was trying to scalp it. Right now, the premiums and the volatility are just, they're so high. Now, the only good thing is you can buy way out of the money and still make money. Okay, some of the scalps that I have taken during this market correction, I've literally bought like $100 out of the money and made money. Because the volatility is such that when you get a $20, $30, $40, $50 move in a matter of 10 or 15 minutes, even if you're $100 out of the money, you're making money, which is crazy to even think about. But the converse of that is if you're not careful and all of a sudden price starts to reverse against you very quickly, you can lose a lot of money very quickly. Okay, I'm going to set an alert up here now above these. So if we get all the way up here, we'll know that price is still going to the upside. And let's try to look at this symbol for Sunny, UUP. There it is, ETF, okay? Obviously not something that I'm normally looking at, so let's start by drawing our lines in. We're on our 4 hour. There's current price. Let me switch to the price line tool. We'll start working our way back. Man, why is price moving like that? Crazy, right? Okay, look at that, whoop, keeps moving on me. Right here off of the 200, I would probably draw one right here and all the way down here. And let's work our way back. Price is at 27.92, which I think it said is the high. Let's go to a daily, see if it's ever been higher than that. Nope, doesn't look like it. Nope. Okay, so it's up at all-time highs right now. So let's go back, change back to our candles. And Sunny, I'll be perfectly honest with you. I'm gonna go back to a 4 hour right now. I don't like, unless you're looking for some type of a big pullback, I personally don't like it once names get up into their all-time highs or maybe really low, just because you start eliminating some of the things some of the tools you can use. So you can see, had a big gap up today, and look, it's been selling off. Let me go to the 30-minute. That'll give us a little bit better picture. Come over here like this. All right, so here's today. Here's where it opened, which was at all-time highs, this big gap up, and then it's just been selling off. All right, so that's one of the reasons I don't like all-time highs unless you're playing it for the pullback, right? You know, you see something like this, and this isn't even really a true shooting star. I probably wouldn't have played this. Now, if it would have been more like that, the body of the candle was down here, that big topping tail, which you see what happened the next day, gapped down and sold off and then came back up. Then it moves kind of flat during most of the days. Now here it had some upside movement, here it had some upside movement, but flat, flat, up and then back. And we have this big gap up and then selling back down. But anyway, that at least gives you the levels below. And you can obviously draw a level in up here at the all-time high. Always put a level at an all-time high or all-time low. I would put a level right there, right? Respected, respected, respected. Okay, so that gives you some levels. But this is not something that I would be excited about trading, but you obviously know this name better than I. That's why, somebody should kind of have their own little basket. You'll know how something moves and what's typical, what's not typical. All right, but that gives you a better look. Let's take a look at the bigger picture while we're here. All right, monthly, it's green, but look at this range. That is unbelievable. That is $4 range on a name that's typically only moving. Let's pick an average size candle. I would say like this one's an average size candle. Typically is only moving less than $1 in an entire month, and it has a $4 range in 1 month, top to bottom. Top to bottom. Okay? So, but at least you can see the levels, Sonny. And I'll go back to the third. Oh, let me go back through here. So there's your monthly. Here's your weekly. Okay, green, green. But obviously we know what it's going to look like when we go to the daily here. Right? So here was yesterday. And even though we gapped up, it sold off. All right, now so you see something like this, that is definitely a shooting star. After a strong move up, this shows you that nothing is an absolute, right? That should be, right here, that should be an awesome signal that you're going to start heading lower. But look what it did, right? Here's where it closed. Look at that huge gap up. Imagine if somebody went short right there yesterday because they see this, because that is a great signal. But that's one of the reasons I don't like very many overnight plays in extreme volatility. I don't like overnight plays a lot. I mean, mostly. I do occasionally take them, right? I took that GDX trade the other day, but I felt like I had a pretty good read on what was going to happen. But I don't know this name that well, but if you just see this, right? You just see this, and then you see this big shooting star, you would think, okay, we're ready to start heading down. And then, bam, they gap it up all the way up here. So, anyway. Yeah, ETF that's a slow mover. You're right about that. Okay, so let's go back and look at the market, and we'll start looking at some other things. We'll look at some Forex here in a minute. Let's get back to the 30-minute. All right, now as you can see, okay, see what's happened here? All right, so we cleared these wicks, but we never got up here. We never got up here to try to take those out. We got close. See, look at my line across there. If you look at those candles over there, we got close, but never got quite all the way up there, and then it's pulled it back. In reality, I'm surprised it got that high. I really thought we were probably going to start turning back around these two wicks. But you guys watched it in real time. Once we took this one out, it bumped us up a little bit. And then we took this one out, and it bumped us up a little bit more. But then it just couldn't get over the hump. And so now we've got a little bit less than 6 minutes, about 5.5 minutes. Price has been slowly pulling back. A lot can happen in 5 minutes. Okay, but slowly pulled back to around this 2406.25 area. And we still got our alert set. Okay, so let's go back and look at some other names. Let's look at Tesla. Oh, and before I forget, look at this. So just since the market's been open, which is not quite an hour, we went from the high 800s all the way up into the high 1500s. That's still in the neutral range. 1200 to 600 is neutral, but we know that the advancers are going up. They're climbing. Okay, so that would make sense that the market would be climbing because the advancers are climbing. Okay, so here we are on Tesla, right here, gapped up, came down, right? Because where did they gap it up to? Right here, just under resistance. So it flushed it down. Where did it flush it down to? Support. Imagine that. Then we came up, we cleared the 20. Look at this break and retest. Let me come back in. Okay, right there, you see that? Break, retest, and go. And then where are we sort of stalling out at right now? Let's see if it makes sense. Okay, does it make sense? All right, so right here, we have a gap down. Then it continued to go down. We came from here, all right? Now, this is not as sharp of a drop. You typically want to see a drop that's a lot sharper than this, all right? But can there be some supply right here? Yeah, absolutely. In the zone, I'll draw it in, okay? I don't really like this zone that well, but I'll show you where it is in case somebody does like it. I don't like it that well. It'd be the bottom of this candle to the highest wick of the base, which is right there. And I'll change that to pink. And then what we'll do is we can come back and look at this later. We can come back and look at this later and see if this ends up turning price back down. Okay, not my favorite zone. I'm just telling you. But just because it's not my favorite doesn't mean that it's not going to be strong supply. We did have a gap away, right? So that tells us there was some strong sellers up here. But we had 1, 2, 3, 4, 5. Well, I guess we only had 6. We only had 6 candles. But this really isn't a big drop down. I guess that's where I'm not thrilled about it. I would like to see this coming from much higher, like maybe up here, down, base, get a bigger drop, base, drop. That would make me feel better about it. But as you can see, so far, it's rejecting. So we'll come back and take a look at it. Okay, you're good, Sonny. You're good. We just finished covering that ETF and we had moved on. Okay, let's look at Walmart. Okay, Walmart, this was yesterday. Remember, right out of the gate, this big move up, and then it sold back off. Okay, still positive on the day, because here's where it opened up and here's where it ended. Today, and then it had this last one into close. Today, gap up, and it's just been flat. All right, so that's Walmart. Let's look at Twitter. Twitter is still overall moving down. See that? Overall, moving to the downside. Today, gapped up, flushed down to start. I don't even have lines drawn in here. I guess I could add them. Let me add them right now just in case any of you trade Twitter. Go to the line chart. Current price. And now we'll get our lines put in. This needs to be adjusted. That's good, that's good, that's good. Okay. So right now everything's good there on Twitter. Let me change it back to candles. Back to the 30-minute. Now we'll take a better look. All right, so there's our levels. As you can see, it's just, nice structure on the way down here, but just steadily climbing down. Okay, maybe catching some support here. We won't know unless we reclaim this up here. All right, and this could be a supply area right through there. How do we know? Because of this drop away. We had a gap and then a continued drop away. So if I come in a little bit tighter, again, this isn't a huge rally base drop. The drop is much bigger than the rally. And you've got 1, 2, 3, 4, 5, 6, 7, 8. You got 8 candles in the base. Again, not my favorite, but if you were going to draw it, you draw it from the bottom of here to the top of here. I'll put it in just because I want you guys to get used to seeing them drawn in, even though this again is not my favorite zone. So the bottom of that red candle to the top of the highest basing candle, which should be about right there. And we would turn it to pink or whatever color you want it to be. I always just use pink and green. All right. Just checking to see if you guys have any comments or any questions about anything. Let's look at shop. All right, so shop, here was our initial bounce. That's when I alerted you guys in the room. We already know that was about a $40 bounce. Then it came down, it caught another bounce. This here was 40-something dollars. Okay, then it didn't quite get up there, and then over here we get up into supply and it sells off, right? And that sells off. So that would have been nice. Either one, right? It touched it here and it sold off, touched it again and it sold off. And here we're below this level. I've already cut the level off. Okay, so we're below it. We caught a bounce right here off of the support level at 305.34, and we've taken a big bounce back up. And then so far we've been rejecting up here. Does that make sense? Yes, it does, right? Because we had rally, base, drop. You would have kind of drew it in right through here. Okay, it wouldn't be the best level. Wouldn't be the best level. We only have one candle, plus it has this big wick to the top side, which was coming from here, right? Which was coming from here. But it does make sense that it stalled out right in here. All right, so that's shop. Let's look at Roku. I just saw something on Roku. I think it was last night. Obviously, with everybody being quarantined and schools being closed and businesses being closed and everybody being home, they're assuming that over time, maybe not an immediate spike, but over time, things like Roku and Netflix and maybe Disney and Amazon Prime, well, Amazon, they own them. A lot of the streaming services may see some benefit because of everybody being at home all the time. I can just tell you right now, we've only been quarantined not even a week yet, and my wife and I are constantly like on Netflix and Amazon Prime and Hulu and all that kind of stuff. So we are definitely taking advantage of it. All right, so here is Roku, still declining, still underneath the trend line. Okay, if I come back here, see we've just been following it down. We were on top of it, bouncing, and we're below it. And kind of we dipped here, came back up near the trend line. Right, so this is Roku. Let me just take a look here. See if there's anything that jumps out at me. Well, this has already been tested though. Yeah, this would have been a demand zone right through here. I'll draw it in again so you can see it. but it's already been tested. So I'll cut it off. You go to the low of that wick there, top of this red body. See this strong move away? So we had drop, base, rally away. There's your zone, and you can see first test, and you can see the bounce out of it. Does that make sense to everybody? So this is what you want to do. Start training your eye to see these areas. Okay, even after they've happened, go ahead and draw them in to get used to it. Right? So drop, it actually dropped all the way down here, but here's our base. Okay, not this, right here. So it'd be these two candles are your base, and then here's your rally away. Drop, base, rally, left in a very strong fashion. Top of this red body to the bottom of this wick right here, draw it across, and you can see how it worked. First test, big bounce away. So it's just beautiful action. It happens over and over and over and over again. You can make a lot of money on very high probability trades. They won't always work, but they're going to work a lot of the time, and they're going to work for big gains a lot of the time. Okay, people who are professional supply and demand traders, I was telling you guys about this yesterday, most of them don't even care about winning percentage. They don't even... don't even worry about it because they know that their wins are going to be so much larger than their losses. Like I'm typically, if I'm scalping or day trading, I'm typically looking for around a 3-to-1 at least. And a lot of times I get more than that. You guys have seen that. Supply and demand, if that's all you trade, you're typically going to get a lot more than that, right? Your risk right here, let's look. I can tell you. 61.42. Right here it is. 61.42 to 59.70. All right, so it's not quite $2. Right, so it's like $1. What is that? $1.70. All right, of risk, and then your reward. I probably would have been looking at exiting right up in here in these big wicks. So let's just say right there, 72.62. And what was the low here? 61.50. All right. So $11 of reward for $1.70 of risk. That's pretty good, right? Right? That's pretty good. That's really good. I'm being sarcastic. That's really good. But that's what if you're trading a lot of supply and demand trades, that's typically what you're going to get. So again, let's say you get stopped out, 2, 3, 4 times in a row, and you lose $1, you lose $1.50, maybe even $2, whatever. It depends on the name you're trading. But when you're winning $11 on one move. That way more than makes up for that. That's why a lot of those supply and demand traders say they don't care about winning percentage. The one guy I'm talking about in particular, he just tells everybody, I don't care. All I care about is profit, and I make plenty of it. So anyway, all right, let's look at some other things. Regeneron. Okay, Regeneron. Whipsawing like crazy now. Got up here and made this high. Dropped. Come back over here. Okay, right here would have been the zone. And again, I keep saying that. I'll just draw it in. And you can see it. I don't even have to go very far. Okay, make this pink. I just always use the same color, that's all. All right, so right here, here's your rally, base, drop. Comes back, very first time it tests, sells all the way down to here. All right, so let's look at the move. What was the move? From 528, it went all the way down to 455.56. And of course, you probably wouldn't have taken it all the way down. You probably would have sold somewhere maybe around here. Okay, 469.67. That's still one heck of a move. That's still a heck of a move. But you see, again, it just plays out all the time, all the time. Right back here, sells off. First touch. When you have them right, when you've got the right zones identified, they work such a high probability of the time, or high percentage of the time, I should say. All right, so that's Regeneron. All right, let's look at some Forex names, just because we haven't. Let's go to yesterday, Euro, JPY. Okay, it has been getting a lot of action. Okay, let me scroll it out for you. All right, so here's Euro JPY. Up here, we created new supply. We haven't even been all the way back up to it yet. We've been close a couple of times. Sold off. Here, you see we came up in here, sold back down. All right, we actually pierced through it, sold back down, and then went higher. Sold back down. That creates this supply that we have not been up into yet, all the way back down to demand, okay, which was created over here. Well, and how do we have that? Rally, base, rally away, right? So you draw it from the bottom of this red candle. You go back to the first red candle that precedes the big move up, and then you use the highest wick of the base. All right, so there it is. There it is. Actually, I take that back. I'm sorry. I actually drew this wrong. I was probably tired when I drew it. It's actually exactly the opposite. It's there to here. Okay, there it is. That is how you draw it, because this is demand. So it's from here to the bottom, the lowest point of the base, and you can see we came down in here, bounced out, came down, and then went up. But we still haven't been up into here. Eventually, we're going to get up into here and probably take a big bounce away. But I've made quite a few pips here recently. Look at this action, right? That's Euro JPY. Let's look at Euro USD. All right, it's been giving us a lot of good action as well. All right, down, up, back down, bounces out, all the way down here. Okay, look at this, all the way down here, barely touches it, and look at that bounce. This is Euro USD, huge. Okay, and we fall away, which is going to create supply. Come back up into it, one touch, boom, fall away again. Now this zone's already been tested. I should have already had this cut off. Let me bring it back over here. I should have cut it off over here. All right, but then you know, the reason I like to leave it, then you can look to the left and know that it was there. But you can see, we'd already tested it, and when we came back this time, right down through. Right down through. Huh, I don't know about a wizard. Supply and demand wizard. Maybe I should get a t-shirt with that, right? With a little white bearded wizard with a wand. Okay, but you guys see this? Let me bring it in closer. So we came out, we created this here. We came out, we came back up, get the test, we fall away. And even though this had only been tested right here, we go right through that area. That's why I cut them off. Once they're tested, they're weak. They get weak. But they can bounce a couple of times. They can bounce a couple of times. Came down here, bounces back up. And here's where we're at currently. So obviously right here, we've got a demand zone. So let's draw it in. Down to the bottom. Let me scroll across so we'll make this a little bit longer. Bottom of that wick, there's your demand zone. Okay, drop. base, strong rally away, that's demand. So now you're looking for price to come back in here. Let's set an alert. I'll show you how I do it. All right, so if this alert goes off, look to go long. Simple as that. Same thing, I've already got that set up here. This one will say, if this alert goes off, look to go short. I see you. I see you, Grayson. All right, so this one up here says, if this goes off, look to go short. This one says, if this goes off, look to go long. Does that mean you do it immediately? No, not unless it bounces immediately. I'm always looking for it to start to bounce, and then that's when I enter. Or if I get like a hammer or whatever. Now, when you're trading supply and demand, you got to be a little bit careful though, especially like I trade a 30-minute chart. Sometimes as soon as it touches, it starts to bounce. Well, if I wait, that first bounce may go away 20, 30, 40 pips. And now I've missed all that, right? So if you, as soon as you start to see it bounce away, that's a good time to enter. And then you can cut the zone in half for your stop if you want. You can go to the bottom of the zone, right? However you want to do it. I know people that do it both ways. Some people just cut the zone in half because they want their stop to be tighter. Others will place their stop, just a penny or two outside of the zone. All right. What else? How about GBP USD? This is another one that's been good to me recently. You can see I got a lot of zones marked here. All right. See what we've been doing on the way down? Okay, it's trending down, but it's also creating supply. We got into demand there, took a bounce, dropped down, into demand, took a bounce, came down, created supply. Now let's zoom in a little bit tighter. Okay, so it doesn't look like I have an alert right there. Let me get an alert set. Put these in just so you guys will see them. Look to go short if alert goes off. All right, so we've come down, and now you see all this choppy stuff here? You want to ignore that, right? You don't want any part of this. You don't want any part of this. And right now, I don't even see any good demand down in here. Okay, so even though we've had this big drop, okay, we dropped, and you could say, well, we dropped, and then we rallied back up to here, but we didn't base it all, right? There was no base in here. And then what have we been doing? Just chopping back and forth, chopping back and forth. You don't want no part of that. You just avoid that stuff. But you see, like, you guys have been on, you'll be on with me on the YouTube live stream tomorrow. And you're on almost every day when we do our private live streams. If you go through your charts and you set enough of these, you identify enough of these zones, and you set enough alerts, there's going to be alerts going off almost every single day, and sometimes multiple alerts in a day. Right? I don't know if it was yesterday or a couple days ago, if you remember, when we first started the live stream, within the first half hour or so, I had like 3 different alerts go off. That's when you're getting into the right mindset. And I was talking to somebody last night, and they wanted to start getting more into day trading. They've been mostly a swing trader, and it's very difficult to swing trade in this environment right now. And they want to get more into day trading, but they just have never done it. And I was trying to explain this to them. They're like, I don't even know what to look for, and how do I know? There's so much stuff out there. How do I know when one name is where it needs to be? You do this. You set alerts, right? You mark your supply and demand zones.
or support and resistance levels, both. You should be marking them both. And you set alerts. And once you've done that to enough names, right, then you're just letting the alerts go off. Now, let's just say this alert right here goes off. Price comes back here, which it eventually will. So say it curls back around. This alert goes off. It doesn't matter what else I'm doing at the time. I'll go right to this name, right? It's going to tell me that GBP USD had an alert. I'll read the alert. It'll say look to go short, and then I'll watch, okay? Does it penetrate up in here and just keep on going? Well, then I do nothing. Does it penetrate up in here and start to bounce? Then I enter short. And for me, I'm going to usually set my stop right up here at the top. And then at that time, I'll be, based on the price action on the way up here, I'll know where the next demand zone is. And that's your target. But something that I do, and you guys are probably already picking up on this, once price moves away from the level a ways, I start to trail it with a stop. That way, if it does reverse, I'm at least making something, right? And you guys can see I've been updating you in the room. Those even getting stopped out for 7 pips, for 12 pips, for 10 pips, whatever, that adds up. Those are green. And then pretty soon, I hit one for 38, or I'll hit one for 50, or whatever. And that's how you accumulate. So going into today, I haven't taken any trades yet today. I haven't had any alerts go off. I haven't taken any trades yet today, but I'm up to 259 pips for the week. I had 551 pips last week, 451 of them in 2 days. So you can see, you don't have to get excited, right? Early to start the week, my pip count was just slowly growing with those little scalps. 7 here, 6 there, 12 here, so on and so forth. Then I hit one for 44. Then I hit one for 38. Then I hit one for 50, whatever, And now, with today and tomorrow to go, I'm at 259 pips for the week. If I don't make another pip the rest of the week, that's a good week, right? I've told you guys that professional Forex scalpers and day traders, they're looking to make 250 to 500 pips in a 5-day trading week. Because they know, and the reason that zone's kind of big is they know you're going to have weeks where it's not quite as good, and maybe you come out of the week making around 250, and then you might have a good week and you make 500. And if you make anything more than that, then that was an extra special week. So like last week, I made 551 pips in the week, but I'm trying to get you guys to understand that 451 of them came in 2 days. Up to that point, I really hadn't made that many pips. And then all of a sudden, I had the right trades hit at the right time. Remember, I had that one trade that was 173 pips. Now, that's unusual. That was a day trade. You don't get those very often. So when you do, you're like, yes, right? Okay. Let's go back and look at the market. We've been looking at some Forex names. Let's see what we're doing. All right, so we've been selling off. Since we've been talking, we've been selling off. We could not clear. I'll stretch it out so you can see it better. We couldn't get up here and clear this, right up here. And I guess in theory, you could say this is a second test of this supply zone, because it is, right? So we're getting a second bounce out of here. We just don't count on it. Once you've had one, cut it off, leave it there. You'll know it's there. And if you get up in this area again, it's possible you bounce again. We did, right? We did. Okay. I was looking to see if we could get up above here. That's why I have this alert set. All right. Now we start looking at other things, right? If we get down here, we've only got about 5.5 minutes to go. If we take out the bottom of this candle, well, then we're starting to look to go down again to the downside. But we know we have this big wick to contend with, right? That big wick right there that showed us a lot of buyers came in right here and pushed us back up. So this could be tough to get through on the first attempt. That's if we clear this wick here. Just keeping those kind of things in mind. All right, anybody have any names they want me to look at? I've got a few more minutes. We haven't looked at BA yet today, have we? Let's look at BA. All right, not doing much. Not doing much other than, you know, going down. It's not going to go down forever. But look at this. Look how consistent it is, right? Kind of flat, gap down. Okay, gradual drop, gap down. Kind of flat, gap down. Okay, flat, big move down. Got a little bit of a climb there, gap down. So we're just steadily moving down, and we are currently at 97.58. I'm still telling you guys, whenever the market turns around, this is going to be the deal of the century. Whenever the market turns around, and that might not be for a long time, we don't know. I'm just telling you right now, it probably won't take 6 to 12 months, and this thing will be back up in the 400s. Guaranteed, mark my words. Write it down in a notebook somewhere. All right, let's look at Baba, China name. All right, Baba got down here, made this nice move up. Let me come over. Nope, okay. All right, so we can do a little practice right here, right? So what do we have? We have a drop, base, rally, okay? That's a strong move down. Even though these are smaller candles, right? They're all red, every one of them. Okay, then we form almost a hammer. Then big wide-ranging green candle. Okay, this might even be a zone right here. This might be what they call a zone on top of a zone. And then we've had this strong move away, and right now it looks like we're starting to put a hammer in here. We got less than 3 minutes to go. But we'll practice here. We're going to draw these in. All right, so that one would go like that. And then this one down to the bottom of that wick would go like that. So that's what they call a zone on top of a zone. It can work with supply as well. And it's literally just what it sounds like, right? So you're likely to come here and bounce. You know, maybe you bounce back up here to the next supply area, wherever that is at the time. Okay, you would cut your zone off at that point, right? You'd cut it off. I'm just making something up. Say it bounces about right here, goes up to wherever the next supply zone is. You would move this in to wherever it bounced from. Now this is your new level below. So it's called a level on top of a level, right? So you come down, you bounce, you come up here, you bounce, and then you're likely to come down here and then bounce, right? That's what you're looking for, especially when you're scalping and day trading, because it gives you lots of opportunities. Lots of opportunities. Now, if you're a swing trader, you're not going to have all these zones that we have on there. I'm drawing these in on a 30-minute. Okay, some people who scalp supply and demand, they draw their zones in on 15 or even 5 minutes, and they're playing, you know, little moves. Okay, what I like about the 30-minute is it still gives you more pips than you normally would, but you can still get them in a relatively short amount of time. Again, I just personally love the 30-minute chart. I think it gives you the best of both worlds, and I think you guys have seen it play out over and over again. I know a lot of you have switched to 30-minute charts, but you trade anything you want, right? Trade anything you want. Okay, so that was Baba. All right, so if it comes down into here, we would expect the bounce. All right, let's look at Baidu, another China name. Okay, there's Baidu. Okay, same thing, right? I'll draw it in. See this? Strong move down. So there's our drop, base, rally away. Okay, now this, you're supposed to go back to the red candle. On this one here, I would probably go ahead and draw it off of here. And that's just from experience. You are supposed to go back to the first red candle. That puts your zone way up here. And I'm just going to tell you, more than likely when it comes back down in, if you do, all right, let's just say you draw it the way you're supposed to. Okay, so if you draw it the way you're supposed to, here's your zone. I'll almost guarantee you the next time it comes back in here, it's going to get down to at least here. It'll penetrate and it'll get down to about right there. Okay, I'll leave it this way and we can revisit this on another day and we'll see what it did. Let me draw it a little bit further across. Okay, this is the technical way of drawing it, the way I'm drawing it right now. You go back to the first red candle, top of the body to the lowest part of the base, draw it across. But I can almost guarantee you that the first time it comes back in here, it's probably going to get down right about where the body is. And again, that's just from experience, right? But I'm going to leave it this way because that is the proper way to draw it. Let's look at beyond. Look at a few more names, and then we'll wrap it up because it's about 11 right now. Okay, beyond, not much action today, right? Kind of flushed down, came back up, spiked up, and now it's right about flat. Okay, beyond, have you guys seen, I've seen people posting it. I hardly ever go to the store. My wife does most of the shopping, but all these people have been posting pictures on social media, like in the meat section, and like the only thing left is like the Beyond Meat, which is the fake meat, the plant-based meat. Like all the real meat is gone, and the only thing left is Beyond Meat, which is kind of funny. Somebody created a meme the other day, and it said, "I still have faith in America," and that's what it was a picture of a meat freezer or meat refrigerator, and all the red meat was gone, and the only thing left in it was Beyond Meat. So, and they said, "I still have faith in America." All right, CGC, we haven't looked at it today. Okay, look at that nice spike. Nice spike right there. Okay, opened up 965, and it's currently at 1085, but it's been as high as 1140. Wow, that's almost a $2 move. Somebody made a lot of money today. I've told you guys before, I play CGC quite a bit. That's a high beta stock, which means small moves, you make more money. The higher the beta, the more money you make on the smaller moves. And let me see, I can probably tell you what it is. Yeah, look, it's number one on my watch list. You see this over here? 3.42. Anything over 1.5 is considered high. That's considered high beta if you're above 1.5. So you can see Amazon, Baidu, Roku, Baba, NVIDIA, and what is this, Trade Desk, and then CGC. So anything over 1.5 is considered high. And all that means is on a small move, you're going to make more money. That's what a high beta stock gives you. And then here's IV rank. This is Tastyworks. This is what I trade off of now. IV rank. There we go. Now they're ranked in order. So this means that BA is 100% higher than its average 52-week implied volatility rank number. So that doesn't mean that its implied volatility is 100. It means that it's at 100% of the average implied volatility over the last 52 weeks. So to make it easy, let's say that their normal implied volatility is 25%. I'm just making the math easy. If it's at 50%, that means it's 100% greater than its 52-week average. Okay? If that makes sense. So that's one of the things that Tastyworks does that I like, especially for playing spreads or playing options, knowing this. So all of these, anything that's over, say, 75, is considered high, right? And look at this. Almost every name is over 75 because we're in an environment of extreme volatility right now. So almost every name is over 75%. If we were in normal market conditions, they would say anything over 75 is considered high for IV rank. But almost every single name, and I've got 25 or 30 names over here. Look at this. Only Tilray, only one is below 75%. That tells you what kind of volatility we're in. All right, so let me get back over to here. Let's look here. I always like to see when something turns, was there a reason? And yep, right here. See it? Okay, so this is how you get better at this stuff. Okay, we had a, technically, this is a rally, even though these are red, right? Because look, price went up, then it dropped. So here's your drop, your base, drop, drop, base, drop. And if we draw this in, you're going to see, let me get it right. Okay, see that? See how easy that is? So as you guys go back through charts, just do this. Just do this and it'll teach you how to draw them in. Okay? When you see price turn, like you see, look at this. Big green candle, even bigger green candle, and then all of a sudden price reverses. There's got to be a reason, right? So look left and just keep going and just keep going, right? Because it was never tested. This didn't get there. This didn't get there. Obviously, these didn't. Okay, just keep going and then you find it. Right there it is. In, I'm going to say 85 to 90% of this, when you see this sort of move and then it just stops on a dime, starts going the other way, about 85 to 90% of the time, you're going to find a fresh supply level. Okay, this should be pink, by the way. You guys see this? So that's all you got to do, right? And that'll start teaching you, it trains your eye. Okay, you just look back across. This doesn't make sense. Why aren't we just continuing on up? Why didn't we get up to here? Right? Why didn't we get up to here? Well, that's because we ran smack dab into fresh supply. And it's a drop, base, drop. I hope that makes sense to you guys. All right, where would our our demand be down here? Where would our demand be down here? First thing we're going to do is we're going to look back to the left, because what we got to do is we got to make sure that if we do draw a demand zone, and we're going to, we're not getting that our demand zone didn't take out another supply zone or demand zone, because then it's not fresh. All right, so where it would be, and you look over here, this is not a demand zone. This is not a demand zone. Okay, this right here is, if I can get my thing to work, right there. Okay, that is our nearest demand zone to where current price is. Because that's what we want to draw in, because we're scalping and day trading primarily. The nearest demand zone, right? Because look at this big push away from this area. And we came down, all right, even though this is the lowest point, this isn't really part of the base, right? This is the turning point. You could maybe say that this candle is part of the base, right there, to the bottom of this candle. Okay, you could maybe say that. This one is not part of the base. That was the turning point. But we had the drop, then here's your base, and then here's your rally away. So this should be a good demand zone when this comes back down in here. It's fresh, strong, right? So if you trade CGC, which I do, I might as well set an alert while I'm here. This would be a highly likely look to go long if this alert goes off. Okay, highly likely you're going to catch a bounce right there. All right, let's take one more look at the market and we'll wrap this up. See where we're at. Okay, right back where we started from. Here's opening candle, flush, back up here, got into this supply for the second time, and now we're still selling off. Where are we likely to go to? Probably somewhere in here, because this is a big wick, right? Probably somewhere in here. Then maybe we'll catch another turn. And this is where, okay, this brings up one point I can teach you before we get off. How do I play in between the supply zones, right? Especially if they're $100, maybe $125 apart or something like that. Okay, well, that's when your support and your resistance and your wicks come into play, right? That's when they come into play. That's why we have opening price level. That's why we have, our support level here at 23.51, which you can see it's been respected already today, already this morning. That's when these wicks come into play. So you use these other tools. That's why I combine them with supply and demand. That's why I combine them. What do I trade again? Price action, support and resistance, supply and demand. I trade all three. Right? Some people trade one of those three. Okay, very few people trade all three of them. I trade all three of them because I feel it gives me more opportunities and it allows me to better see what's happening on the chart. Okay, so again, down in here is where you'd be looking at probably finding some sort of support, maybe even right here at the support level because it's right smack dab in the middle of the wick. If it keeps breaking through there, well then like if it breaks through here, okay, now I'm looking, can I take this out? If I take this out, I know that this was fresh demand over here. So if it got down into here somewhere, maybe you're looking at over here. 22.79, so on and so forth. If it starts bouncing up, you got your level here, you have these two wicks here, you have your supply area here, although now it's been tested twice, right? If you want, you could, if this helps you, I don't normally do it, but if it helps you, you can drag this over, just like that, and then you'll know it's been tested twice, right? Okay? Any questions? Okay, Al, you might have missed it. We talked about that just a little bit earlier in the session, but for me, I'll tell you, textbook says they like you to have 2 to 3 to no more than 6 candles for your base. I'm perfectly fine because I trade a 30-minute chart. Only having 1 or 2. I don't really like to go too much over 6. When you start getting, so like right here, 1, 2, 3, 4, 5. That's fine, right? And you can see it worked really well. But if you start getting 7, 8, 9, 10, that's probably not going to be a good zone because you're chewing up too much of the demand. Which means that the next time it comes back down in there, it's going to probably just go right through it. Let's remember, okay, logically, what is supply and demand? When we're in a demand zone, okay, the imbalance is that there's more buy orders than sell orders. More buy orders than sell orders. Once the sell orders are gone, the buy orders have nowhere to go but up. And in a supply, it's exactly the opposite. There's more sell orders than buy orders. Once all the buy orders are gone, then the sell orders have nowhere to go but down. So if you're in this area in a base and you start getting to 7, 8, 9, 10 candles or more, you're now just ranging. And you're chewing up that supply or that demand. And now, even if you leave that level, the next time you come back through, you're probably going to go right through it. Okay, so for me, on a 30-minute, I'm perfectly fine. Look, right here, one candle, drop, base, drop, and you can see it worked beautifully here, and it's actually been respected a second time. All right, and that's off of one candle. But remember, 30-minute candle, if we were on a 15-minute time frame, that's 2 candles. If we're on a 5-minute time frame, this right here is 6 candles. So keep that in mind. Al, I almost never roll. That's just me personally. That's a personal preference. I'm not telling you not to roll. If you want to roll, you can do it. I personally never roll. Okay. First of all, I'm usually not in a trade long enough that I really have to do that anyway. But I don't do it. So I'm probably not the right person to ask because I just don't do it. That's my personal preference. And if you look up different, you can go to YouTube and look up, option rolling strategies and things like that. You're going to find both point and counterpoint. Some people are big time into rolling and they'll give you all the pros, and then other people are big time against rolling. They'll give you all the cons. Watch a couple of those videos. Watch a couple on each point and counterpoint, and then you decide, what's best for you. And if you like to roll, take some of the strategies that those videos give you on people who do like to roll their options. Okay, but I'm really not the right person to ask. If there's something that I don't feel comfortable giving advice on, I'll just tell you guys. I won't just make it up. Right? So because I don't roll options myself, I don't like to do it. I would much rather you make your own decision on that. And I would firmly push you to go to YouTube and look up options rolling strategies and watch a couple of videos on people who are for it and their strategies for doing it, and people who are against it and their strategies on why, or their reasons on why they're against it, and then make your own decision. I hope that helps you. Oh, you're asking about the contract. I'll switch over before too long, but there's still plenty of volume on this contract right now. But I will switch over before too long. So if I go to trade and trade grid, why is this not bringing it up? Give me a second here. Option chain. March. There we go. Okay, here's March. If I come down here, okay, still plenty of activity. I thought I had, I switched it. That's right. I don't have open interest on here. I think you can come up here. Here it is, volume and open interest. Okay. So, 4,000, 1,500, 3,700, 15,000, still plenty of volume in this current contract. But I will roll over to the next one, before too long. It won't be too much longer. But as long as there's plenty of volume, I keep trading on the current contract. If the volume starts to dry up, then obviously, or you get close to the end of it, then you move over. Okay, so hopefully that answers your question. But as you can see on here, still plenty of volume and open interest. I mean, even look at this. This will tell you something, and this has nothing to do with what you're asking me, but look at the volume on a 2350 put. 10,350. Let's see here. 2,600 call. 13. Oh, that's open interest. I'm sorry. 71.99 volume on a 2,600 call. That's nuts, right? Because look where we're at, 2403. Either way, those are big moves away, and you see tons of volume in those areas. So let me get back to the charts. Yes, I'm an options trader, so I don't trade the standard contracts. I trade the options. Do I occasionally trade the standard contracts? Yes, occasionally, but about 90% of the time I trade the options. I'm an options trader primarily. Same thing with equities. Instead of shares, I'm typically trading options. I'm trying to identify, right? I'm trying to identify big, quick moves, and I'm in and out relatively quickly, right? Sometimes it can be a few minutes. If you're scalping, 5 minutes to 30 minutes is usually about how long, no more than an hour. If your mentality is to scalp and you're not done with that trade in say about an hour, you probably should just get out of it. If you're day trading, to me, a day trade is 1 to 3, 1 to 4 hours. So same thing, the regular trading hours is 6.5 hours. I don't want to be in a day trade more than say 1 to 3 typically. I might go as long as 3.5 hours or so. And then again, if it's not going where I thought it was going to go, then you just get out. There's no reason letting the premium just melt away. Definitely, I'm talking about, obviously, it didn't go against you. You're just kind of flat, or you're just sort of melting. You've heard the term melt up. Where that comes from is your premium is melting away. Even though you're going up, if you're not going up fast enough and you're trading options, your premium is melting away. And I've talked about this before. You might not have been in the room. Not today. I talked about it on another live stream. There was a day before all this volatility where we watched, and over the course of one day, price went up. Let's say it was about $15, $16 over the course of the entire day. And if you would have bought options like at the money at the beginning of the regular trading hours and sold at the end of the day, even though price went up $15 or $16, you would have only made $50 holding it all day long, and price went your direction by $15 or $16 because your premium was just melting away the whole time. When you trade options, you need quick moves up or quick moves down, and that's the power of options. You can make more money on options than you can on standard contracts if you get quick moves. Standard contracts are better if the move is slower. Okay? Okay, good. I hope that answered your question. Anybody else have any questions? Okay, I'm going to go ahead and wrap this up. Once it loads to YouTube, I'll take the link and I'll put it in the premium room, and then you guys can go back and rewatch this and take notes or look at anything you want to look at. As you can see, as we're getting ready to leave, we're getting a little whipsaw right now. We've been up, down, and we're going back up right now. So that's not really good trading action right there when you get whipsawed like that. So we're just going to pay attention. But guys, thank you so much for joining me. I'll go ahead and get this link out to you as soon as it uploads. Thanks a lot, guys.